Hello, everybody. Welcome to Know Your Money. I'm Bronwyn Weiner.
And I'm Craig Finch, and we are from Growth Financial Planning. We hope you enjoy our podcast.
Hello, everybody. We have Melody from Bidvest Life back in the studio just to talk about some of Bidvest's features. And today we just wanted to talk about the importance of income protection, especially for the younger generation. I know Bidvest has a really good way of doing that, especially students and people early in the market. So thank you for joining us, Melody.
Thank you for having me.
Good to see you again.
Yes.
Good to see you. So I think young people tend to think they're invincible and I'll get it later. I don't need cover. It's for older people. I don't have dependents yet or that sort of thing. But the reality is that things happen to young people. And when we look at our claim statistics, and I've read a couple of claim stats from other insurers in the industry, and they're seeing the same trend, that more and more young people are claiming. So there's definitely a need for younger clients to have cover in place. Myself included, when I first came into this industry, I was not as grey as I am now. But I thought, I'm still quite young. I'm still figuring things out. I'll just, take a little bit of cover. And then, later on, once I know what I'm earning and all of that, I'll, get more cover. And not knowing that literally 6 months later, I'd be diagnosed with an autoimmune condition, which has now rendered me medically uninsurable for the rest of my life. So the little bit of cover that I got as a 20-something-year-old, single, not married, no property, no kids, no dependents. Now, in my 40s, I'm married, I've got property, I've got kids, but my financial plan is not enough. I have this ginormous gap because my health means that I can't get cover. So it's really, really, really important that you start getting cover as young as possible. And with Bidvest Life, we can start covering someone from the age of 17 on an income benefit, which I think is really phenomenal. We've got quite a few matric students on the books. We've had quite a few claims from those matric students, especially our rugby players. And that cover follows them into being a student, and then when they graduate, into the careers that they follow from there. So really, really important.
So can you tell us how a 17-year-old gets covered or how that starts?
So first off, it might sound a bit counterintuitive getting income protection to someone who doesn't earn an income. What's that all about? Yes, that student might not be earning an income, but the parent is financially responsible for that child through school, through their studies. So if something happens to that student, that they can't finish their studies or they have to delay their studies or maybe can never enter the job market, they're going to be financially dependent on that parent. So it's really the parent protecting their income in case something happens to that child.
So is the 17-year-old in university, not in
No,
matric?
so they can be in high school. It's just
The age of entry.
the minimum entry age is 17, age 18 next. So it could be a matric student or it could be someone after school. If they're in school, that's fine. If they're a tertiary student, they have to be in full-time tertiary studies to qualify as a student. Obviously, if they're not a full-time student, they're probably working and they could then cover their income.
Do students get a lower premium, and is it also then backed by their parents, so to speak?
So, it can be either way. Either the parent can pay for it or the student can pay for it. We're not fussy around that. But yes, because they're young and they're generally healthy, their premiums are quite cheap. So it is actually quite affordable. I think we recently did one, just a little case study. An 18-year-old non-smoking male had, I think, 18,000 Rand event-based income, which is our temporary income benefit. They had 18,000 Rand extended income benefit. They had 100,000 Rand disability and critical illness lump sum, and they had future cover protector on top of that. And it came to a premium of about 150 Rand, which is really, really, really affordable.
So how would you insure the matric for 18? How do you get to that number, or do they have to be going to studying something?
So they can give us, based on the parent's income, so they can give us the parent's income on the quotation, like you would add in a spouse's income for someone else. It really doesn't. The minimum for any income protection with us is R1,000 a month. So they can take whatever it is they can afford. The minimum premium is R100. So because they're young and the premium's quite cheap, they actually have to add quite a few benefits just to get to the minimum premium requirement. But yeah, we can give them 18,000. And like I said, whether the parent pays the premium or the child pays the premium, that doesn't matter. But it's on the child's life. So the child's health is underwritten at that point.
Yeah, I have a cousin, and she's in her 70s now, and very sadly, she was run over by a car crossing the road from school. I think she was 13, so it wouldn't have applied now. But just the impact on the family, because her parents are passed away a while back. Luckily, there's a big extended family with brothers and sisters, so they've had to step in and help or make sure that Charmaine's got cover where she is in a home.
So I can tell you a story exactly on that. A student that we had covered, his parents had the foresight to take income protection when he went to university. Exact same thing happened to him. Walking, someone hit him with a car. It was a hit and run. They left him there on the side of the road. And he now has permanent nerve damage in his arm. Can't use his left arm anymore. I don't know what he was studying, but let's imagine he was studying to do something that would require manual labor.
Yeah.
I mean, now he has to completely pivot what his life plan was. Because they had student cover with us, he got income protection, temporary income protection for 24 months. After the 24 months, they determined that he had permanent damage. He had various operations, all sorts of things. So he's been deemed permanently disabled. He's now getting that monthly income until he turns 70. I think his policy was until 70. So in total, that's going to be over 23 million rand that we're going to pay to him. Yes, he might be able to pivot and go into some other career, but that new career, he might be earning significantly less than what he was hoping to earn becoming a surgeon, as an example.
So even if he goes into a different career and earns an income, you'll still provide that income?
When a claim, an income protection claim is permanent, you've been deemed permanently disabled, we won't aggregate at all against any other income that you can earn from any other job that you can do.
Another odd question.
Yes.
What happens if you are injured while abroad or on a gap year or something like that? Does the cover still stand?
Good question.
That's a good question. So first off, abroad, we do cover people going overseas, whether it's just for a while or you're immigrating there. As long as you still have a South African bank account that we can debit or pay your claims into, then that's fine. You can take your cover with you. We do have, unfortunately, it won't be on the student cover itself, but on the comprehensive cover, we've got something called the sabbatical option, where if you decide to take a gap year, you want to take a sabbatical from work for a year, you want to go have your eat, pray, love moment overseas or something like that, we'll keep your cover in place. There's some changes that we'll make. We'll make your waiting period a bit longer. If you had any business cover on, we'd remove the business cover because you're obviously not going to work in your business. And then after that 12-month period, when you come back to work, your cover just reinstates back to what it was.
Yeah, I had a similar
before.
thing when I went on tour for an extended period of time for 6 months. It was Discovery years ago. And they allowed me to take a break, but then come back.
Yeah. So we have various mechanisms like that built.
But it'll depend where you go to. You can't go anywhere.
It's also going to depend.
Geographically, there are some places that are not safe.
Yeah,
so
if you're going to a red list country, so like if you're going to Afghanistan, you're going to the Ukraine, you're going to Israel, any kind of war-torn country, a couple of African countries as well, where you won't be covered just because the risk in that country is so high.
Yeah. So if you do move, you must tell the insurance company.
Absolutely. You need to check with us if you'll be covered in that.
So if you just go on holiday though and something happens,
you're covered. You're fine.
No
that's fine.
No, I just wondered if it was like a weird thing that it's only if it happens in South Africa.
But why won't you be paid back in South African rand? You won't be paid in the currency you are.
in whichever
Wherever
country you're
country,
in. Yeah, we'll pay
Back
here.
to SA, bank, SAU. Yeah.
Yeah.
Okay.
But yeah, so just back to income protection for young people. So I mean that was an example of a student that had a permanent injury, and so we're taking care of that student for the rest of his life. We had another example, not as severe. I think second or third year student had stage 2 skin cancer, and students can also have critical illness income. So we spoke about CI income on our previous episode. So he got a full year, full 12 months at 130% for that skin cancer. And built into how the product works, when that student graduates and he now starts working. So let's say he graduates, he becomes an accountant. As an accountant, he qualifies for our comprehensive cover. He's currently on the event-based product. He can do a conversion from event-based to comprehensive without any medical underwriting. He just has to answer 3 questions, psychological questions. Have you been diagnosed with depression or anxiety? Have you taken any antidepressants? Have you ever had any suicidal thoughts or attempts? If they say yes to any one of those questions, there could be a psychological exclusion, but there'll be no other medical exclusion. So despite the fact that he's already claimed for a stage 2 cancer, he's now converting over to comprehensive cover, no cancer exclusion. If that cancer comes back somewhere in future, he's still able to claim on his policy.
Can he increase the cover?
He can increase the cover, but the increased cover will then be underwritten. Okay. But if he had 18,000 Rand as a student, he can get 18,000 Rand converted like for like, free of underwriting, and then whatever increases they have, they underwrite.
You referenced events versus
Comprehensive.
Event-based cover versus
So it's
comprehensive
event
cover.
student, basically. Yeah.
So we're going to talk about event-based cover in a bit more detail later on, but typically the event-based cover is for people who are in occupations who generally don't qualify for traditional
a student
comprehensive
wouldn't
income
normally
protection.
qualify because they're not earning an income.
Right.
So
Yeah.
that's a
That's why
student
it's an
event.
event.
Yes.
Yeah, so it's based on specific events that happen to them. So you just prove that this event has happened and we'll pay that, instead of where for like cover that we would have would say, can you do your job or not? If you can't do your job, we pay.
Bidvest got a
event-based,
great,
it's an event.
their benefit is that the student studying law in most other companies is not covered. They will be covered when they become a lawyer, but they cover them right from
From matric.
being a
all the way
student
through.
and then convert into a lawyer, for example, as an example. Yeah.
Okay.
But for our practice, we've always looked at from the cover perspective that income protection is, for me, my personal opinion, the most important cover.
Absolutely.
Because you just you just quoted 23 million. You just do the maths on a 40, 30-year career of what with escalation of what you are going to earn, and if something happened to you, that's a real calamity.
That's exactly it, because, and this is again what young people don't think about, but your ability to earn an income is your biggest asset. You know, older people have properties, so if something happens and you have to, you know, in a crunch, you can sell your property and use that money, or you've got investments or something. But as a student or a first-time income earner, you've got nothing. Selling your phone is not going to, you know, take care of you.
Yeah.
So protecting that income is incredibly
So
important. Even if they could qualify, well, actually, you know, if you do, like you say, if you do the calculation, if we did the financial needs analysis for this 23-year-old, and, you know, we see that his ability to earn an income is worth 23 million Rand, he wouldn't even qualify for 23 million Rand on lump sum cover because he doesn't earn enough for that. So really, income protection absolutely is the foundation, because it's affordable compared to a lump sum benefit for what you need. It's much simpler to claim on it than it is for a disability lump sum benefit, because that requires you to be permanently disabled. And statistically, we see it's a very small amount of people who actually meet that permanence bar.
Yes.
And yeah, it's a no-brainer. If you're young, it's that income protection that's going to pay for everything else that you have, medical aid, school fees, whatever it might be. Yeah.
Awesome. Thank you so much. Very insightful.
Thank you. See you next time. Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website, www.growth fp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.